Hello everyone, we are team UG027 for the Credit Research Challenge. Today, we're going to present our credit research report on Adani Ports. The agenda of the presentation is as follows. We're going to start with a brief background of the company, followed by its management and corporate governance structure. We will then move on to the industry overview, followed by the financial analysis, Adani Ports' competitive advantage, its rating history, and the key rating drivers of the company. We will conclude with the credit rating model that we have used to give the final rating to Adani Ports. Adani Ports and Special Economic Zone Limited is the largest commercial ports operator in India, accounting for 15% of the cargo movement in the country. Its presence across 10 domestic ports in 6 maritime states of Gujarat, Goa, Kerala, Andhra Pradesh, Tamil Nadu and Odisha presents the most widespread national footprint in the country. The port facilities are equipped with the latest cargo handling infrastructure. Their ports are equipped to handle diverse cargoes from dry cargo, liquid cargo, crude to containers. The vision of this company is to be a world-class leader in businesses that enrich lives and contribute to nations in building infrastructure through sustainable value creation. Let's begin with the overview of the company. Adani has a market capitalization of Rs 749 billion. The shareholding pattern of the company is very well diversified. The promoters hold 46%, foreign institutional investors hold 19%, domestic institutional investors hold 17%, insurance companies have a stake of 12%, mutual funds have 3%, and non-institutional investors hold around 3% of the shares in the company. This shareholding pattern shows us that there is a strong belief and optimism of the investors in this company. The Swot analysis of Adani Ports is as follows. The strength of Adani Ports lies in the fact that it is the largest port operator in India and handles around 15% of India's cargo. The weakness of this company is that it may face some allegations on the environmental law violation front. The opportunities for Adani Ports may lie in the infrastructural projects put forward by the government. There are also some threats which the company has to deal with. For example, fluctuations in the international price of coal and mining scandals. Adani Ports commenced its operation with one berth in 1998 and it attained Special Economic Zone status for one of its ports, the Mundra port. In 2007, it issued 4,250,000 of equity shares of Rs 10 each. The company managed to raise a huge amount of 1771 crores from the public, which was a big achievement. In 2010, it became the world's largest fully mechanized coal import terminal. In year 2014, Adani's Mundra port crossed 100 million metric tons of cargo handling in a year and became India's largest port developer and operator. Mr. Gautam Adani is the chairman and managing director of this company. Mr. Karan Adani is the CEO and the whole-time director. Mr. Deepak Maheshwari is the chief financial officer. There are 10 people in the board of directors, which include Mr. Gautam Adani and Mr. Karan Adani. Adani Ports has formulated and implemented a code of conduct for all board members and senior management personnel of the company. Let us now give you an outline of the port sector in India. India has a coastline of greater than 7,000 kilometers, which provide ample opportunities to this sector. Port sector in India is driven by high growth in external trade, with traffic reaching 699 million tons. The cargo traffic at major ports is increasing at a compounded annual growth rate of 4.86% since financial year 2016, and the cargo capacity is increasing at a compounded annual growth rate of 11.78% since financial year 16. Now, if we compare the total throughput of the industry with Adani Ports between financial year 18 and 19, it shows us that the total throughput of Adani has increased by 15%, while the industry average was just at 5%. This also shows us that the growth of Adani Ports and its performance was way better than the industry average. The major competitors of Adani Ports are Siemens Group, Seagrove Group, Alphard Group and the Swot Services Group.
Let us now give you some insights into the financial position of the company. It has earned a revenue of 10,925 crore in financial year 19. The revenue of the company has grown at a CAGR of 18% since last 5 years. After cutting the expenses, it has given an EBITDA of 7,067 crores, which has grown at a CAGR of 19% for past 5 years. Profit after tax of the company is stood at 4,006 crores, which has grown at a CAGR of 18% for last 5 years. The company is highly leveraged with debt, but the interest is comfortably covered as it has a decent interest coverage ratio of 3.6. Current ratio of 1.5 shows that its short-term assets covers its short-term liabilities. However, we observe that the long-term liability of the company are not covered by its short-term assets. Adani Port enjoys many competitive advantages and has a strong business risk profile because of its favorable operating characteristics, geographically spread out footprint, diversified cargo mix, long-term customer tie-ups, and its ability to register high growth in the cargo volumes compared to its industry peers. Now, let's look into the credit rating history of the company. Standard & Poor's has given BBB- to its long-term foreign currency, and Moody's has given Baa3, and Fitch has given BBB- to the same. All three ratings show stable outlook to these instruments. Long-term facilities and NCDs are given a rating of AA+ by ICRA, CARE, and India Ratings and Research, whereas short-term facilities and commercial papers are given a ratio of A+ by ICRA and India Ratings and Research. Let us now move on to key rating drivers of the company. The credit strength of the company lies in the fact that it has strong competitive profile and efficient management, which helps in the execution of the port and associated infrastructure projects in a timely manner. Adani Ports has been in the midst of continuing capex plans over the years. Many of the port projects commissioned in the recent years are witnessing a gradual ramp-up in cargo volumes amid a challenging external trade environment. In addition to its existing capex requirements to expand its current operations, Adani Port is undertaking development of the Vizhinjam port and a container terminal at Yangon port. Its financial profile is expected to remain healthy due to expected improvement in cash flows from the ramp-up of operations at the newly commissioned and operational ports, as well as from the receipt of upfront income from asset monetizations. Furthermore, the company has refinanced some of its debt with borrowings of longer tenor at lower interest rates, which supported its liquidity owing to the lower interest costs and repayments. From the accumulated cash balances resulting from the surplus cash generation and low-cost long-term fund raised at parent level, Adani Ports continues to fund a majority of its projects at the special purpose vehicle level. The credit challenges which the company faces is that they are redeveloping the Vizhinjam port, which cost around 4,168 crores, and the terminal at Yangon port, which cost around $290 million. The Vizhinjam port project has been affected by natural calamities and is currently running behind schedule. Even though Adani Ports has a track record of successfully developing several ports in a timely and cost-effective manner over the past decade, any further major delays and cost overruns in the ongoing projects at Vizhinjam and Yangon will be a rating sensitivity. Adani Ports may bid for port projects on a pan-India basis under the Public-Private Partnership Board or acquire assets in ports or logistics businesses. But they should keep one thing in mind, that further debt-funded acquisitions may pose a deleveraging risk. Finally, we try to give credit rating to this company, and we have used three parameters for this purpose. Firstly, we have used Outbound Z-score, which tells us about the probability of company's insolvency in the future. We use this parameter as it found to be approximately 80 to 90% accurate in predicting bankruptcy 1 year before the event. A score of greater than 2.99 means that the entity is safe from bankruptcy. Adani Ports scored 5.16 in this parameter, which tells us that the company is unlikely to go insolvent in coming future. Thus, we have given it a rank of AAA+. We then use the Petrosky F-score, which tells how the company has performed in the past 1 year. We use this parameter as it shows the financial strength of the company and scores it between 0 to 9. Good scores range from 7 to 9, mild scores range between 4 to 6, and bad scores range between 0 to 3. These scores help value investors to find winners so that accordingly they can make their investment decisions. Adani scored 5 in this, which tells that the company's performance was average. Thus, we have given it a rank of AA+. And the last one is modified C-score, which tells the chances of detecting creative accounting through financial numbers. If a company scores 0, there is no evidence of earning manipulation, whilst 6 suggests that there is lots of evidence for earning manipulation. Since Adani scored there too, there is minimal evidence of earnings manipulation. Tweaking figures can lead to higher bonuses for directors, help convince a lender to give a firm a loan, and inflate the company's valuation. Thus, we have given it a rank of AAA+. The scale that we have used to define Adani Ports is as follows. AAA+ indicates very strong indication of safety. AA+ indicates strong indication of safety. A+ indicates above average. BBB+ indicates average. BB+ indicates below average, and B+ indicates weak indication of safety. Thus, after analyzing the key financial position and using the credit rating parameters as defined, we have given Adani Ports a rating of AA+. Thank you.